Giant DoorDash. They are reportedly testing out an AI-based chatbot named Dash AI in select markets, and it's going to help you get orders faster, but it's also going to help customers find the type of food that they want with personalized recommendations before they order. Now, DoorDash's CEO has said that the company is, quote, running different experiments internally. Those are the company stories we're following this hour. I'm Lisa Mateo. This is
You're listening to Bloomberg Markets with Paul Sweeney on Bloomberg Radio.
All right, Matt Miller, Paul Sweeney here in the Bloomberg Interactive Brokers Studio looking at these markets. Kind of like what they heard from the central bankers this week, like what they heard from companies reporting earnings. And it was a busy week on the earnings front. S&P 500 up 0.8%. NASDAQ, how about that? Up 1.5%. Yields, they're kind of coming in a little bit. 10-year Treasuries off about 4 basis points, 3.95% on your 10-year. We did breach a little over 4% earlier today. WTI crude oil pulling back just a little bit, $79.81, off about 0.3%. Right now, let's head down to Washington, D.C. We'll get world and national news. We'll do that with Nathan Hager.
Okay, Paul, thank you. Senator Mitch McConnell says he will serve as Republican leader for the rest of this Congress. That is what the Kentucky Senator's office is saying in a statement obtained by CNN. There have been questions about McConnell's leadership after the 81-year-old froze at the beginning of a news conference on Capitol Hill this week. The statement does not say anything about McConnell's plans after this current Congress. It ends in 2025, and McConnell will still be serving in the Senate. The two Republican frontrunners in the Republican presidential race are going to be in the same place at the same time tonight. Bloomberg's Amy Morris has more on that from Washington.
Donald Trump and Ron DeSantis are both slated to speak at the Lincoln Dinner in Des Moines, Iowa, a staple gathering for Republicans, and the first time they've appeared together in Iowa since DeSantis entered the race. DeSantis is rebooting his cash-strapped campaign as he continues to slide in the polls. Trump, who is polling ahead of all other Republicans, is facing more legal issues. He also has to mend ties with Iowa conservatives after attacking Governor Kim Reynolds for remaining neutral in the primary. In Washington, I'm Amy Morris, Bloomberg Radio.
The Biden administration is working on a plan B for student debt after the Supreme Court struck down President Biden's original plan to cancel loan payments last month. Democratic Senator Elizabeth Warren says she's all for it. She discussed the issue on the latest edition of Bloomberg's The Big Take podcast.
I want to be the America that says if you're young and you try hard, then we are willing to support you in education. Now, we can do that by making college free or making college $50 a semester. But if we're not going to do that, let us not say, we're just going to lend you the money. And if anything goes wrong, your life is destroyed financially.
Catch more of our interview with Senator Elizabeth Warren on the Big Take podcast. You can find it on Apple, Spotify, or anywhere else you listen to podcasts. Facebook has reportedly removed content related to COVID-19 in response to pressure from the Biden administration. That is according to a report in the Wall Street Journal. It cites internal communications that it says it's seen. The paper says one email exchange took place 3 months after Facebook decided to stop banning posts on whether COVID was man-made. Republicans on the House Judiciary Committee have been investigating what they call White House efforts to censor conservative views on social media. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nathan Hager in Washington. This is Bloomberg. Paul and Matt.
Sorry, blue button. Thank you very much. Nathan Hager, thank you very much for that good stuff. All right, Ford Motor Company says it's going to lose a little bit more money on this whole transition to EVs than it said before. Matt,
dude,
like $1.5 billion more.
This is one of those stories. When I read this story, I literally, my mouth was agape with surprise. And I am not exaggerating. I just was shocked. And it has so many implications for the industry. I mean, they're going to lose so much money on EVs because they have to continue to compete with Tesla.
Is that, I mean, is it a price war thing?
It is 100% a price war. And this is the kind of thing we're going to see who has deeper pockets, you know, the Ford Motor Company or Elon Musk.
So they initially said this EV transition would cost them $3 billion. Now it's $4.5 billion. That's a big delta. Does it cost more to make an EV versus an ICE car?
It costs a hell of a lot more, especially when you just started doing it, right? So down the road, they know how to do it. All the fixed costs disappear and everything's cool.
Yep.
That's why they make so much money on the F-150, the gas version.
Yep.
Right? The problem is this EV technology, to make them, you got to retool the plants. It's a whole new way to do it. Eventually, it'll be cheaper, but not yet.
All right. I mean, that's what Kevin Tynan, Bloomberg Intelligence, he covers the auto industry. He says, you know, it's a tough transition because they make so much money on the big trucks and SUVs. Ford, down 3%. This is Bloomberg.
This is Bloomberg Markets with Paul Sweeney.
We got a lot of green on the screen here, but the volume is light. This is a market that's much more optimistic or bullish than maybe the central bankers are. 9.5 million job openings. What are people doing? Are they just sitting in Starbucks all day?
Breaking market news and insight from Bloomberg experts.
There's still some concern out there in the market that there is room for things to deteriorate a little bit more than what they're indicating.
As small and medium-sized businesses struggle, they don't present as much competition.
What are you guys thinking about hardware, software? How should investors approach this thing called AI?
This is Bloomberg Markets with Paul Sweeney on Bloomberg Radio.
All right, Matt Miller and Paul Sweeney here in the Bloomberg Interactive Broker Studio. We're also streaming on YouTube. Just head over to YouTube and search Bloomberg Global News. Coming up, the real reason Matt Miller came back to Bloomberg Markets is because he missed talking about municipal bonds. So we're going to check in with Eric Kazaski, Senior Municipal Bond Strategist at Bloomberg Intelligence, to figure out what's going on there. Plus, Justice Palmer, CEO and founder at Fortuna Investment, joins to give us the call on the investing space. Space investing. That's what I'm talking about. That's all coming up. But first, let's kick things off with John Tucker and get a Bloomberg Business Flash, John.
All right, Paul, Matt, thanks. Stocks rallying on hopes inflation is cooling enough to get the Fed from hiking interest rates again. The inflation measure that the Fed prefers slowed last month more than expected. And more encouraging profit reports on top of that. Intel surging after giving a bullish PC sales forecast for the second half. Steve Chivaron at Federated Hermes is bullish of stocks.
I think this goes higher for longer, and I'm talking about equity markets right now. So we see upside through the old highs, even if storm clouds do eventually, materialize. But we don't think it's soon.
All right, S&P 500 right now, 42 points higher, up 0.9%. We're at 45.79 of the index. The Dow Jones Industrial Average, 210 points higher, up 0.6%, 35,492 on the index. The NASDAQ 100, that's the leader right now, up 249 points on a percentage basis, up 1.6%. The U.S. poised to tighten fuel efficiency standards today for automakers. Could come as early as today. This is going to be applicable for model years 2027 and beyond. No size. I'm going to guess back in 1978, Paul was a freshman or...
Yes.
Okay, in high school.
Yep.
Matt, grammar school. Jess Menton was a gleam
in
the eye.
I wasn't quite in grammar school yet.
I wasn't around yet.
1978, I was 4 until November. So
it happened that this movie opened in 1978. Animal House was
nice.
Raked in $130 million, and I think it was just a few million to actually put this thing together.
I don't think they went overboard on production value.
What a great movie. Well, they had Otis Redding in the movie.
Yes. Otis Day and the Nights.
You know what?
He loves us.
What do you think I am now?
All right, we could go all day with Animal House references, but thanks for...
Niedermeyer.
All right, we got to stop. John Tucker.
I got to say, Brian Sullivan from CNBC, he's my Niedermeyer,
John Tucker working on that Bumble profile still.
Oh, no, not going to happen.
Oh, that could be good.
I'm old school.
Gotta add that to it.
Swiping right on.
I'll work on that this weekend. How about
there we go.
There we go.
All right, John Tucker, thank you so much. We got some green on the screen here, folks, led by the tech sector. Jess Menton joins us. She covers all the equity markets for us. She joins us here in our Bloomberg Interactive Brokers studio. Jess, what are you looking at?
Happy Friday, y'all.
Yes.
So happy to be here. And then Matt back again. Looking at the S&P 500 up close to 1% for the week. So it's actually been up 9 of the past 11 weeks. And you look at the NASDAQ 100 up about 2% this week. So that would put it also up 10 of the past 14 weeks. And you're clearly seeing, especially these more risk-on, growth-oriented corners of the market moving higher. We did get the sort of twin duo inflation readings this morning, especially when you're looking at the PCE, the Fed's preferred gauge, but then also the employment cost index. Powell had highlighted this actually in December of 2021 when he had dropped transitory a few weeks earlier on Capitol Hill when referring to inflation. And so he had talked about then how obviously this is a key gauge when you are looking about how the Fed is measuring wages in particular. So we got that. It's quarterly. We got another reading for that this morning. So it is pointing more in the right direction. But we do have about 8 weeks until the Fed's next meeting. And in between that, we'll have Jackson Hole at the end of next month.
Still waiting for my invite.
Exactly. So we'll have 2 CPI reports left, PPI, a couple PCE readings, one more in addition to the one that we got today. So that'll be interesting to see about a month from now. But something else, I always like to look at seasonality. So SEAG Go. I know that Matt likes to look at that too.
I love it.
It's great. And you can see the heat map there.
Heat map is the only way to do it. I don't even know how it works otherwise.
I actually have a story coming on Sunday with Elena Papina on our equities team. So clearly July, historically a very strong month. But when you do get into August and September, those are notoriously the 2 weakest months of the year. And it's been interesting because sometimes with seasonality, especially with June, that's typically the June swoon, we didn't see that. Stocks bucked the trend, but it was in line with that typical historic seasonality with the end of the month coming up at the beginning of next week. So kind of looking ahead to what's happening with sentiment, also positioning as you go into those weaker type of months there. But those are some things we're looking at too. And then I also have an earnings watch column that I'm putting out on Saturday Saturday where I'm taking a look at, and Paul, you and I have talked a lot about this when you're looking at the U.S. dollar spot index for Bloomberg and how far it's come off of that peak back in September, down over 10%. That's obviously correlated pretty strongly with the Fed's rate hiking cycle, how strong it was last year, but obviously as eased back on some of the aggressiveness with those rate hikes, we've seen that come down, obviously bolster the equity market. But Gina Martin-Adams, your buddy over at Bloomberg Intelligence, always crunching the numbers there. And so her and her team were looking at about how more than 40% of the companies in the S&P 500 do have EPS that is negatively correlated with the dollar. So not surprisingly, this would be those multinational companies like technology, growth, especially communication services, also staples and materials are the ones that are set to benefit most because they do think that we'll continue to see more easing and the dollar over the longer term once the Fed is officially done. But if you do look more in the shorter term, the RSI for the dollar index actually had risen to close to about 70 in the beginning. I know how Matt feels about technicals. I know how you feel about it, and I knew I was going to get that reaction too. But it's come off of that level. And it's around.
I'll tell you what, if it's that simple and I understand it easily, it can't be real.
Abigail Doolittle, she educated me on that, so I'm all in.
So she's totally a tech analyst.
I know. So basically that was telling you kind of in the nearer term, the dollar was a bit oversold there, so it wouldn't be surprising to see a little bit of strength there, but more in the longer term, just given the Fed's trajectory, more likely in the longer term it would continue to fall, but wouldn't be surprising to people to see it strengthen a little bit when you see those oversold levels.
If I look at EA Go almost religiously, and for the S&P, we're looking now at an earnings contraction.
Yes.
I know only 252 companies have reported so far, so just over half of the 498 companies in the S&P 500. But sales growth is still there, 1.87%. Earnings have dropped 1.94%. And I guess this is year over year, right?
Yes,
so from the same
correct.
quarter last year. What do we expect it to be at the end of earnings season? How bad?
So basically, if you are looking at what is coming in those before earnings season actually started, those expectations were for a 9% contraction. If you're looking so far with the amount of companies that have reported, it's actually the latest growth is a little bit worse than that. It's around 9.2%, and that's with about 57% of the market cap of the S&P 500 reporting. So we still have Apple, Amazon next week, but things so far are coming in actually slightly worse than expected. But the thing that a lot of, especially Gina likes to look at, she takes out energy. Like she looks at S&P 500 excluding energy earnings because the weakness that we've seen in energy has actually masked some of the strength in other industries. If you're looking at, say, what's happening
energy earnings are down 49%.
Yes, and it was the flip side of that last year. So the strength in energy was masking the weakness in other indexes. So she was arguing that actually the earnings recession started in the second quarter of last year. So if you do look at the terminal and you look at the S&P 500 earnings growth excluding energy, it's actually back to growth in the third quarter and then back to double digits in the beginning of next year. So that's something that's, I think, a bit skewing when you are looking at what the latest growth is, when you do see that 9% contraction number.
All right, so you're telling me that earnings are troughing, rates are peaking.
Margins, most of the pain Gina thinks is past.
I mean, but what are you going to do with that? You're not a buyer of the market, right? Because everybody else has already bought it.
Right.
The NASDAQ 100, to that point, Matt, is up 44% year to date. Isn't that amazing?
It's
I mean, that's that
incredible.
whole discounting mechanism that they talk about.
You and I would be the last ones in.
We're the last ones in the marketplace. We're
What
going
do
to be
you
the
do?
last ones in the marketplace. I'm like, that sets up for, I don't know, more move. All right, thank you very much. We appreciate it. Jess Menton, she covers all the markets for us, and she joins us here in our Bloomberg studio.
Oh, man.
You're ready?
First time back.
Let's go. Focus on Munis is brought to you by Build America Mutual. The New Deal created American infrastructure that unleashed new opportunity. Today, we're doing it again with massive investment in modernizing our infrastructure and municipal bonds backed by Build America Mutual. Help make it happen. Invest in the future of America with BAM! Insured bonds. How about that, kids? All right, Eric Kazatsky joins us. He is the guy who does all the municipal bond work for Bloomberg Intelligence. He's been doing this for quite some time. Eric, I'm looking at INGO, the Bloomberg Index browser, and my municipal bond index, it's positive 3.25%. And if I went municipal high yield, I'm up 5.3%. You guys are doing okay this year.
Yeah, we're doing pretty well, especially in high yield, to your point. I really think it's a case that a lot of stuff got thrown out with the bond sell-off earlier in the year, and high yield disproportionately so. And I think people are sort of got the joke now, right? Very, very low statistical default rate, zero correlation over to corporates, especially in the corporate high yield space, and just a pretty positive place to be if you're trying to get a lot of yield.
So, I mean, Paul is like the BOJ of the muni market. He owns like 85% of the issuance. Are we going to see a lot more issuance now? I mean, apparently this IRA money is hitting the streets. How's it affecting the outlook?
I mean, we're not seeing that in the visible supply numbers over the next 30 days, and certainly not hearing that anecdotally from any of Paul's banker friends that, they're going to be bringing a ton of new deals over the next few months. Look, seasonally, it tends to pick up when we get to the fall. We're hoping that tracks as in prior years, but right now, still down 20% year to date. The good news is that has provided a little bit of a positive tailwind to muni price performance this year, as Paul noted to start the conversation.
All right, so the taxable municipal bond index, that's up about 3.9%. Talk to us about the taxable muni market these days.
Yeah, I mean, I still think it's a good place to be, especially when comparing to, let's say, agencies, right? So in the front end of the curve, obviously treasuries and agencies make a lot more sense in between, let's say 3 months and 1 year. But after you get past that, taxable munis are really the place to be if you're looking for maximum yield. And again, an uncorrelated asset class, and we're seeing the demand continue to be there from overseas buyers.
So overseas buyers, talk to us about a typical buyer in the taxable muni space. Who is that person?
Foreign insurance companies who are looking to get domestic U.S. fixed income exposure and really don't want to play in the corporate market. For I think the majority of this year, everyone had recession on their mind. Obviously, Chairman Powell thinks we're not going to see one. That is yet to be seen. But I think, for the most part, buyers want to be in, let's say, a state of California geo, right? A name everybody recognizes, highly liquid in the market, and doesn't have correlation to consumer spending or the corporate market.
When you're funding, when you're a municipality funding something, what makes you issue taxable munis as opposed to the munis that we all know and love?
Yeah, I mean, so I'd say the first part of this pandemic, when rates got ultra low, it was really an economic decision for a lot of these issuers because they couldn't refund their debt with tax-exempt debt. So they decided to go to the taxable market and, get out of some of those old bonds. Still, if you issue in the taxable market, you have less restrictive covenants and you have a much broader buying base, as we just discussed, right? You're bringing in overseas buyers. You're bringing in crossover buyers who really aren't typically looking at the tax-exempt space. And you have a little bit more liquidity on average.
So talk to us about Texas. I read a story on the Bloomberg this week. There's still issues with the state of Texas and municipal bond underwriters from certain investment banks like Citi. Has that impacted their ability to raise capital or the efficiency of the state of Texas to raise capital?
Or has it made it more expensive, right? Because it seems like it's harder or more expensive for Texas to raise capital than it is for California to do so.
Yeah, it's hard to really parse out what's causing that. So, for instance, over the next several weeks, there's going to be a lot of Texas school district debt coming into the market. Whenever you have sort of a glut of sort of a common issuer like that, you're going to see spreads tend to be a little bit weaker, right? Because people are sort of getting full on that sort of paper. So are we to say that it's more market structure, market timing, or is it really to the points that you originally pointed out? I really can't say. Obviously, when you have less underwriters focusing on an area, that's obviously less liquidity being supported in the marketplace. But with issuance on a whole down 20-ish% year over year, I think there's ample demand coming from retail.
So there's a big infrastructure thing going on in the United States. A lot of that was passed during the pandemic. Are you seeing in the municipal bond market, are you seeing issuance tied to that, or do you expect it?
Not a ton. I mean, airport issuance is still a little bit softer year over year. We're not seeing any sort of big marquee name projects coming online. Hopefully, again, as rates ease a little bit and we head into 2024, you are going to see a lot of more, I would say, larger projects come off the sideline in a more favorable rate environment.
So you said issuance is down 20%. Is that simply a function of rates going up so dramatically over the last 12, 14 months?
Absolutely. And that's just on the exempt side, right? On the taxable immunity side, we're off about 50% year to date. And again, it's really explainable when you look at how much volume was coming in the taxable immunity market from those advanced refundings.
All right, so what are the big topics that you and your team are kind of looking at now for the muni space?
We're really focused on where credit's going to go in the second half of the year. And I think a lot of that has to do with the narrative surrounding, what cities look like going forward. Obviously, a lot of pressure coming in the commercial real estate space. I think it's going to be a slow-moving story to play out in far as how it affects municipal credit. But, we saw a little bit of this in 2008, 2009 on the single-family housing side. We definitely think there's going to be a move for appeals in some of these larger commercial buildings.
We're going to need far less money, far less funding here in New York as John Tucker starts to pay the congestion charges.
Exactly. We're going to he's going to fund, who knows what he's going to fund.
My big question in the muni space, why isn't the Ferris wheel working at the Great American Dream Mall in the Meadowlands in New Jersey?
That's it.
Next time I'm up there, I can investigate that and do a channel check. But I'm very sorry to hear that.
All right, Eric, thanks so much for joining us. Eric Skazatsky, Senior Municipal Strategist for Bloomberg Intelligence. I mean, you drive into the city.
I do.
What are you going to do?
I mean, this is one of the things that Tucker and I
Street?
have been talking about. Our parking garage is on 58th Street, and the congestion charge zone starts at 60th.
Do we find a new garage?
I mean, does that mean, so it's like, what, $23 or something?
Yeah.
So I'm going to be paying...
Well, there's still, the city of New York, whatever board they set up is still doing the carve-outs, who gets discounts or is exempt. I'm hoping they're going to...
I think radio and TV personalities...
well, those that come in at 3:30 in the morning, I think, should be exempt, because
I don't think anybody should be exempt.
Oh, please.
Nobody. I would do the whole island of Manhattan, and I would make it 30 or 40.
Well, that's the problem. Then traffic gets backed up in the outer boroughs. It gets backed up in New Jersey, and then the pollution problem is just simply moved over there. And is it? I mean,
really I don't know. Is it really? Because I would just not drive my car into the city. I would just walk from my house the 5 minutes to the train station and take the train instead.
But how if you're at 2 o'clock in the morning, like these knuckleheads like John Tucker and Michael Barr?
It's a good point. So.
I mean, these people, and Michael Barr comes in from Ohio, so God knows what kind of tolls he's paying. So we'll have to keep on top of that. All right, we're going to have more coming up on congestion pricing. This is Bloomberg. Let's get some company news right now with Lisa Mateo.
Good morning. AstraZeneca reported core earnings per share for the second quarter that beat estimates, but did not increase its guidance. CEO Pascal Soriot explained why on Bloomberg TV.
We're only halfway through the year. We have investments to make. We have a tremendous portfolio of products. We started 9 phase 3 studies this first half. We have committed to launch 30 phase 3 studies this year. So a lot of growth today, but also tomorrow and the day after. And as a result, we have to invest in this fantastic science that we have.
Now, Soriot also responded to questions about a lung cancer study that had a negative readout on share price. He said that detailed results of this study will be reported later this year. Shares of AstraZeneca right now, well, they're up more than 4.5%. And people are trading fewer high-end watches. Bloomberg's Jeff Bellinger reports.
A Bloomberg index that tracks the activity has fallen 16% in the last year. Mid-tier luxury watches from companies like Omega and Cartier are outperforming higher-end timepieces from Rolex and Patek Philippe on the secondary market. Higher interest rates and shaky economic growth are pushing up the supply of used luxury timepieces and pushing down prices after a surge in 2021.
Now, sticking with the high-end market, consumers, they are stocking up on Hermès' high-end bags. Now, that's the maker of Birkin Kelly bags, which actually sell for about $20,000 each on average. They reported first-half earnings and sales growth that beat estimates. Now, revenue in the Americas gained 21% in the second quarter. Those are the company stories we're following this hour. I'm Lisa Mateo, and this is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
I'm John Tucker in the Bloomberg Newsroom. This Bloomberg Business Flash. Consumer sentiment rose to the highest since October 2021 as inflation eased. In addition, the Personal Consumption Expenditures Price Index, that's the measure that the Federal Reserve uses to track its inflation goal, that slowed. At the same time, consumer spending climbed. Intel delivered a bullish sales forecast. You put it all together, you get a Friday rally in stocks. Procter & Gamble's sales and earnings, they both surpassed analyst projections. And then you have ExxonMobil, that kind of bucking the trend, the profit missing estimates there. The S&P 500, 48 points higher right now. 1% increase, 45.86 on the index. Dow Jones Industrial Average is up 244 points. And the NASDAQ 100, 289 points higher. That is up 1.9%. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Matt and Paul.
All right, John Tucker, good stuff. We appreciate that. Matt Miller, Paul Sweeney, live here in the Bloomberg Interactive Broker Studio, and we are transmitting over that interweb thing on YouTube, so you can head over to YouTube and just search Bloomberg Global News.
Can you also just stream it on Bloomberg.com?
Probably.
On Bloomberg Originals as well.
Can you?
Yes.
No, not yet. No, not yet. See, the people behind the glass just jumped in my ear. It's good to have Matt Miller back because we just fly off the handle. We say whatever comes to our minds.
Well, I mean,
we don't know. We just work here.
I mean, I assume that'll happen imminently.
Talk to the bosses. I don't know.
All right. Well,
okay. Well, you talk to the bosses.
Whatever. YouTube is fine.
YouTube is cool. That's where the kids go.
Is it really?
I think
when
so.
you say that, then I feel like that's not the case.
That's not the case. All right. Let's talk space. Let's talk investing in space. Justice Palmar joins us here. He's the CEO and founder of Fortuna Investments. He joins us here in our Bloomberg Interactive Broker Studio. He is streaming on YouTube. Justice, talk to us about Fortuna. What do you guys do? And talk to us about kind of your investments in space.
Absolutely. So we're an award-winning venture capital firm. We've had a tremendous track record in other industries. We famously made a name for ourselves back in 2016, 2017. That was back when Elon and Tesla were just beginning to take off. It wasn't the star. Tesla was not the star then that it is now. Just to give you context, Elon was selling like 60,000 cars a year. He's selling 2 million cars a year now.
And you guys invested in?
We stayed away from Tesla,
okay.
But what we did was we realized it was the lithium-ion batteries that were fueling this electrification.
Gotcha.
And so what we did is we co-founded a couple companies in that industry. One went to $1 billion on NASDAQ, and the other one was sold last year for $460 million. So we've had a tremendous track record in other industries. Now we've turned our attention to this new space economy. We believe this to be a once-in-a-lifetime opportunity, and we're so happy to be on the front line.
And so Starfighter Space is the first investment that you're making. Tell us about this company, because not everyone's heard of it.
Yeah, it's a private company. They're located at the John F. Kennedy Space Center at NASA, right beside Jeff and Elon. And so what Elon and obviously SpaceX gets a lot of headlines. And so the secret sauce, what Elon's doing is he's got this Falcon 9 rocket cranking. He's taking it up every single week, and he's focusing on the heavy payload, big satellites, heavy payload. That's what he's got going on. And so for us at Fortuna, we realize there's a void in the market because the small satellites are actually being neglected in a certain way. And technology is actually getting smaller and smaller and smaller. So we've made a $50 million commitment to starfighters to help grow out this beautiful space ecosystem that's starting to emerge.
So the small satellites, they're like shoebox-sized satellites, right, that are getting launched in the dozens with these kind of, you have a F-104 supersonic aircraft. How do they launch those? They just fly up to the top and kick them out, or what is their payload delivery system?
You know your
like?
stuff. It's amazing. So so the short answer is yes. Technology is getting smaller and smaller, and so they could be anywhere from like a pizza box all the way to even the size of your iPhone. And they're called small sats, nanosats. And so Starfighters, with our funding, is actually going to get their launch license. So they expect to have their launch license in the next 8 to 12 months. And as soon as we get that launch license, as Paul said, we already have the 9 F-104 fighter jets that fly Mach 2 speeds, tremendously fast, obviously. And if you think about the 9 fighter jets that we have, that's bigger than, I don't know, Switzerland's Air Force or certain countries' Air Force, right? So we've got this as a private company, 100% owned, no debt, and we look really forward to taking this next step in terms of the launch game.
how do retail investors play, investing in space?
Sure, and so it's a bit of a loaded question, but here's what I'll say. I believe that so we've come off the worst market crash in the last 20 years, since 2008, almost 20 years. And so a lot of the stocks have been extremely depressed in that industry, in all industries, albeit obviously there's been an uptick in the last couple of months or so, but we at Fortuna believe that the market's to perform extremely well over the next couple of years. Reason being is there's trillions of dollars of cash on the sidelines. We've seen peak interest rates. We also realize that there's going to be M&A activity galore, and it's a U.S. presidential year coming up. So there's a lot of really interesting catalysts coming up for the equity markets. We think the market's going to perform well, and within there, space has been a depressed category that we think is going to perform very well over the next couple of years.
So,
sorry.
What I was going to ask, what else is there besides launching satellites? We hear so much about space mining, but I don't think anyone's ever really achieved that, and it seems like it must be a decade away. So what else? I mean, I know Elon Musk wants to go to Mars and put a colony there. What are we talking about?
Yeah, so we at Fortuna, so we're blessed. We've got almost 30 individuals, 30 folks on our team. These are research analysts, these are investment bankers, CAs, CFAs, all sorts of brilliant people. So we actually get pitched 3, 4, up to 5 times a day from various space companies looking for investment. So to answer your question, Matt, we see it all, or not all, but we see a lot of really, really interesting things coming through our desks. And so I agree with you. I think that the space mining is still maybe 8 to 12 years out, potentially. But there are interesting applications such as, for example, solar energy. We at Fortuna are big in solar energy. We've got solar energy investments here in the US. But just conceivably, if you think about it, the sun that we get on planet Earth here, it's actually diluted. It's diluted by the Earth's atmosphere, and we get a very diluted version of the sun. And so if and when we're able to have satellites with solar in outer space, you think about that, it's going to be 10,000 times more powerful, clean sun. And things like this are going to be the future of this beautiful industry that's just starting to come together.
The cord would be so long,
Yeah, exactly. So, I mean, what's the VC world like today in terms of raising capital, deploying capital? We've got higher interest rates. The world's really changed from that free money of just a couple of years ago. How has it kind of impacted your business?
Yeah, so that's just it. The growth stuff has been really, really hurt. VCs are very shy to put money out, although that might have changed in the last 30 days with this AI push. Aside from the AI, it's been a really, really tight industry. A lot of guys are licking their chops because they've financed companies at extremely high valuations, many of which will probably never be seen before. So it's really tricky. But for us at Fortuna, we monitored the space industry. We actually thought it was a little bit too buoyant over the last couple of years with the SPAC craze and some of these things that were going on. We did our homework, and we're actually using this as a perfect entry point, in our opinion, where technology's been the furthest it's ever been, and valuations have actually been the cheapest. We play the long game. We play 5-year, 10-year cycles. And so for that reason alone, it's a tremendously exciting opportunity.
Did you see the congressional hearing the other day?
Oh, yeah.
On UFOs?
Sure, I'm glad they're working on that.
So apparently we have some alien wreckage. It's top secret, totally classified.
Okay.
So why are you saying it? You're just
outing the whole thing.
I mean, that was the big thing about this this congressional panel. If we could just get some of that technology, imagine how much you could, supersize the space investment.
Yeah. So I mean, all right. So
just moving along.
I mean, I thought of it because you asked, how does a retail investor get in on space? And my immediate reaction is to type in ETFGO on the Bloomberg terminal. So I do that, and I put space in the description, and then I get ARCX is an ETF you could use. And so Kathy Wood. UFO is another one. And Rocket.
ROKT, that is hitting 52-week highs. Take a look at Rocket. It's a really nice basket. The stock looks from the bottom left to the top right. General Electric, for example, that's a great way, in my humble opinion, to play it. Obviously, talk to your own financial advisor. It's not financial advice, but GE was a global conglomerate. They're getting rid of everything, including healthcare, and they're only focusing on aerospace and avionics. And if you take a look at that chart, it's been one of the best performing stocks out there. Yeah. And so that's another, low access, easy way to start to, look at these things, because the reality is all the listeners at home and some of the folks, they don't have the chance to necessarily buy the SpaceX's or the Relativities or the Fireflies or some of these private companies that the VC world are currently
Can you
backing.
buy SpaceX on the secondary market?
Yeah, we ironically, we had an opportunity to buy it back in 2015 at a $15 billion valuation. Obviously, we did not do that. Why would we? Still kind of kicking ourselves. But yeah, we do get offered the SpaceX rounds of financing, absolutely. But what we try and look for, we try and find the SpaceXs before they turn into the SpaceX. So we're not necessarily looking for a $150 billion company. We're looking for an earlier stage company.
Is private space industry, is it primarily a U.S. industry, or are there other countries doing it as well?
It is a global industry. It's a $540 billion global industry. Of that, the U.S. is over $200 billion, so it's almost half of the global output. We at Fortuna believe it's going to $1 trillion industry this decade. It's going to be the fastest growing industry next to potentially AI coming up here, which is one of the reasons we're so excited about this industry.
A lot of those launches go out of French Guyana.
Yep.
Right?
Yep, went down there once back in the day for one of the when the satellite industry was just kind of kicking off. It was a good trip, actually. Justice Palmer, our CEO and founder of Fortuna Investments, joining us here in our Bloomberg Interactive Broker Studio, talking about space, investing in space as a venture capitalist. Lots of opportunities there. S&P 500, there's opportunities right there. It's up over 1% today. The NASDAQ is up 1.9%. So there you go. The market's definitely liking what they heard from the earnings side and liking what they heard from some of these central bankers, reflecting that in the marketplace. Right now, let's head down to Washington, D.C. Roll the national news with Nathan Hager.
Paul, thank you. Former President Donald Trump says he is not dropping out of the 2024 race, even if he is convicted of crimes.
Not at all. There's nothing in the Constitution to say that it could.
The former president spoke on the John Fredericks radio show this morning, a day after special counsel Jack Smith added more charges and a new defendant to his classified documents case against the former president. Trump is taking his campaign to Iowa today. He will appear at the Lincoln Dinner in Des Moines, along with several other GOP candidates. In Ukraine today, Russian forces have been pounding a key village that Kiev claims to have recaptured in its grinding counteroffensive in the southeast. At the same time, the Kremlin's accusing Ukraine of firing a missile at a city in southern Russia about 24 miles east of the border. Russia says at least 15 people were wounded. President Vladimir Putin is meeting today with African leaders. He does plan to address the war with them. Senate Minority Leader Mitch McConnell plans to serve as Republican leader for the rest of this Congress. CNN reports the Kentucky Republicans' office put that out in a statement today, but it did not address McConnell's plans for after the 118th Congress. It ends in 2025. The 81-year-old drew concern this week after he froze mid-sentence during a news conference. And McConnell wasn't the only one with a shaky moment on Capitol Hill. Bloomberg's Anne-Marie Hordern has the latest on Democratic Senator Dianne Feinstein.
She seemed confused in an appropriations committee, and she looked down to start giving a speech, but really she only had to vote aye or nay. And then she was prodded to just vote. She did it, and then she was told by the senator next to her, just say aye.
Bloomberg's Anne-Marie Hordern in Washington. At 90 years old, Senator Feinstein is the oldest member of Congress. She was out more than 2 months earlier this year after battling shingles. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nathan Hager. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. I'm going to say we're flirting with 4,600 on the S&P 500. Upside data surprises have stoked optimism that the Fed may execute a soft landing for the economy. Also had some robust corporate earnings. Annika Beneby at Julius Baer says stock averages can top record highs for this year.
We have that soft landing scenario that's looking as if it's coming to fruition. We have the tech stocks leading the way with the boon from AI. And I actually think this AI is going to seep into other sectors of the economy and the fundamentals of equities. And so I do think that going into the end of the year, we should see higher equity markets.
S&P 500 right now, 50 points higher, 1.1%, 4588 on the index. Dow Jones Industrial Average up 262 points. The NASDAQ 100, 305 points higher. That is up just about 2% on that index. P&G shares rising, the company blowing past earnings estimates. The fiscal fourth quarter earnings there. ExxonMobil shares, they're lower. The company reporting a profit miss. And this is interesting for what's believed to be the first time in U.S. history, the amount of office space in the U.S. is declining. You had less than 5 million square feet of new offices breaking ground in the U.S. so far this year. At the same time, 14.7 million square feet has been removed, either converted to something else or just bulldozed. It's been so bad that you have landlords on Wall Street like Blackstone and Brookfield
Walking
Asset
away
Management.
from stuff, right?
Yeah, those two, they actually halted payments for what they regarded as some of their money-losing
And they've got
properties.
gajillions of dollars sitting on the sidelines.
And they
even they're walking away.
They can do that.
That's going to get bad.
And we check the markets for you all day long. Constantly.
John Tucker. Thank you very much for that. John Tucker there giving us a look at what the markets are doing, and they are rallying right now. Let's get into some of the reasons behind that. We had a raft of economic data out earlier this morning, including personal spending, including the PCE deflator, the core PCE deflator, which is what the Fed cares about, and the employment cost index. All of them basically better than expected from Chairman Powell's point of view. Angie Solanki is going to join us right now to talk about this. She is the National Director of Retail Services for Colliers. And Angie, you know, every data point that we've gotten over the past week just looks like we're doing better on growth and better on inflation. And the consumer is really driving all of that. Are you seeing it that way as well?
100%. I mean, if we look at the numbers, consumer confidence was up, right, in July. And if we look at it and compared to first quarter of 2023, there was a little concern with customers in the U.S., you know, the cause of potential recession, the fears around that, the hype in you know, talking about it. So what we've seen now in second quarter is that they're actually starting to loosen up the purse strings. They are spending more. They're spending more in certain areas, though, such as personal care. So we're seeing a nice kind of growth in that sector as it relates to that, as well as in, you know, eating out at restaurants. So foot traffic's a little slow there, but we're seeing a nice healthy sales increase in the restaurant spend data that we've collected.
Yeah, try getting a restaurant reservation down the Jersey Shore on the weekends. Impossible. I mean, it is crazy. So Angie, talk to us about kind of in the retail space, you know, foot traffic versus kind of the old e-commerce, because it seems like during the pandemic, the retail industry pulled forward maybe 2 or 3 or 4 years of market share gains by the e-tailers at the expense of the stores. Where are we now in that kind of mix?
So we haven't seen the second quarter numbers on e-com sales, but we do know there was a 3% increase for first quarter. Nonetheless, we're still seeing a consistent pattern, an increase in foot traffic at shopping centers, redeveloped and repositioned projects. So why is all of this happening? If you stop and think about what happened during 2020, 2021, there was a reinvestment by many of the landlords and developers out there putting money back in capital into their projects. So you're seeing kind of this new flavor of, you know, projects, mixed use, outdoor lifestyle, and it's just sprinkled with all these amazing new concepts. I mean, we're seeing concepts that we haven't seen before that were online or e-com and still have that channel, but also have a brick and mortar. And the combination of that is really showing a nice, healthy increase in terms of sales for those brands.
Don't people want to go back to the stores, to inside, a shop, touch things, pick things up before they buy them?
100%. They want to be educated. They want to have that experience. Think about Tiffany's. It's in New York, as you know, in your backyard, and the Landmark Cafe, right? So they have this cafe, that's the buzz, and it's just going to create all this, experience that people are going to remember, and they're going to actually say, hey, I want to go back there on an annual visit. So we're going to start to see more brands create that more experiential component within their stores, as well as investors looking to do the same as they start to look at placemaking within their projects.
Angie, how about the Chinese consumer, the Chinese buyer? Is he or she, is that really impacting any of the retailers? Because, again, we see here in Midtown Manhattan, and we've certainly seen the European tourists come back here in droves, which is great to see. But we've yet to see the Chinese come back. How do you think about that? How do the retailers think about that?
I think they've really looked at their overall global model, and so they're not really hyper-focused on how do we really solve for what's going on from post-pandemic here in the U.S. So when we look at, call it maybe the luxury premium brands, more on the luxe side, they're actually seeing a nice healthy increase, almost by 20% for certain brands overseas in China. So they're still seeing a nice lift in sales, albeit it might be slightly less than here in the U.S. itself. There's still a high demand for luxury. Luxury hasn't softened considerably. It's still booming, and I think that these brands are looking at, okay, how do we look at still being luxury, but still being somewhat approachable for certain income demographics. They're still shopping.
It seems like, okay, it'll be great when the Chinese come back, but this market, throughout my career, we constantly underestimate the strength of the U.S. consumer, or the consumer's ability to take on debt to pretend to be strong. What do you think, Angie, about how much excess savings, how much bigger fiscal stimulus, bank balances the consumer has left? Because this is currently something that the Fed is debating internally. Do we still have money from those stimmy checks? Do we still have money from the savings that we stored away during the pandemic, or are those gone?
I don't think there's any. I mean, the savings are still there in terms of stimulus checks. I think those are gone. That left the deposit box a while back. So this is really it has to do with labor, right? So we're seeing definitely an increase in labor in terms of unemployment. There's less unemployment, and therefore we're spending a bit more, but we're somewhat cautious, but still feeling a little more relaxed in how we're spending. And so I think we're going to continue to see that. We're forecasting that the end of the year, in terms of retail sales, will probably hit about 3.5% over prior year. And that's not bad at all. I mean, our average over the 10-year has been 3%. So it's a nice lift. Yes, it has to do with, increase in pricing, but that's not going to slow down, at least that what we're forecasting through 2023 and then parts of 24.
Angie, talk to us about the grocery business. That's where a lot of folks really experience inflation.
So in the grocery space, yes, prices have increased. There were supply chain issues last year. Things started to shift. Cost of goods, labor costs also impacting pricing. That we're starting to see, not heavily inflated. It's starting to come down in terms of price for your staple items, milk, eggs, etc. We have seen a bit of a softening in terms of foot traffic and the number of visits to a grocery store. But hey, look, it's summer 2023. People are out, they're traveling, they're enjoying entertainment through either watching the latest, movies that are out, and also enjoying, a nice social experience at whatever favorite restaurant they may have to enjoy. So we are seeing a little bit of slowdown there, but nonetheless, that's going to come back in terms of grocery as we get closer to the holidays.
Angie, thanks so much for joining us. Pleasure having you on the program. Angie Solanki there, National Director of Retail Services for the U.S. at Colliers. This is Bloomberg. Let's get your world and national news now. For that, we go company news. And for that, we go to Lisa Mateo. Lisa?
Hey there, Matt. American Airlines and negotiators for its pilot have reached a preliminary deal on revisions to a proposed contract. Bloomberg's Gina Cervetti reports.
Changes include higher pay and benefits that would better align with the more lucrative pending deal at rival United. The union told members in a message that new terms include a 21% ratification bonus. American pilots were previously set to start voting on a new 4-year deal on July 24th, but the union canceled that vote after United reached a better agreement with its union.
Now, shares of American Airlines right now up nearly 1%. And Apple is accused of patent infringement over its AirTag tracking technology. Bloomberg's Steve Rappaport has more.
Lisa, MooTag tracking in a federal lawsuit alleges Apple violated the company's exclusive right to commercialize its patented AI-driven system that helps users locate lost items. AirTags allegedly feature 17 claimed limitations from MooTag's U.S. patent number, including a method to collect user behavioral data from other devices. MooTag's lawsuit comes 2 days after Apple was accused by another company of violating its patent for a system allegedly used without authorization in the Apple Watch. Lisa?
And shares of Apple right now up more than 1.5%. And Roku really rallying. Shares are up more than 23%. And this after the streaming video platform reported second quarter revenue that blew past expectations. Now, net revenue was up 11% year to year. Analysts are positive about the results, but warn that Hollywood strikes could have an impact if they continue. Those are the company stories we're following this hour. I'm Lisa Mateo, and this is Bloomberg.
You're listening to Bloomberg Markets with Paul Sweeney on Bloomberg Radio.
All right, Matt Miller and Paul Sweeney here in the Bloomberg Interactive Brokers Studio looking at these markets. Continue to rally. The S&P 500 up 1.1%. The NASDAQ now over 2%. How about that? So good move here to end the week. WTI crude oil off just fractionally here, but still just under $80 per barrel. Yields also coming in a little bit. 10-year Treasury 3.96%. We did get to as high as 4.04% earlier on the day. Right now, let's head down to Washington, D.C. We're going to get world and national news with Nathan Hager.
Let's do it. Thank you, Paul. Former President Donald Trump is indicating not much is going to stop him from running in 2024, even a conviction on criminal charges. The former president told a conservative radio show this morning there's nothing in the Constitution to force him to drop out of the race. Special counsel Jack Smith added more charges against Trump yesterday in the classified documents investigation. Pangea Policy founder Terry Haynes says when it comes to the Republican Party, it may be reaching peak Trump.
If you look at the polls, both nationally and in early primary states, which are much more important than the national beauty contest, you've got at most half of the folks being for Trump, which means that half aren't.
Pangea Policy's Terry Haynes spoke on Bloomberg Television moments ago. Former President Trump takes his campaign to Iowa today. He'll be appearing at the Lincoln Dinner in Des Moines, along with the current runner-up in the GOP race, Florida Governor Ron DeSantis. Republican Senator Mitch McConnell plans to serve as his party's leader for the rest of this Congress. That's what the Kentucky Senator's office said in a statement obtained by CNN today. Questions about McConnell's leadership came up after the 81-year-old froze at the beginning of a news conference this week. The statement did not say anything about McConnell's plans after the current Congress. President Biden is going back to the drawing board on student debt relief after the Supreme Court struck down his initial plan to cancel millions of Americans' payments last month. Democratic Senator Elizabeth Warren says higher education wasn't always this expensive.
My folks couldn't afford to send me to college. But I made it through 4 years of college with not a penny of student loan debt. And you know why? Because when I went to school, when I graduated from high school at 16 and headed off to college, you could graduate, you could go to the University of Houston, where I went for $50 a semester. I could go to college and pay for it on a part-time waitressing job. That opportunity is just not out there for most of our kids.
Senator Elizabeth Warren spoke with us on Bloomberg's The Big Take podcast. You can catch more of that interview. Subscribe to The Big Take on Apple, Spotify, or anywhere else you get your podcasts. President Biden has signed an executive order giving decisions on the prosecutions of serious military crimes, including sexual assault, to independent military attorneys, taking that power away from victims' commanders. This formally implements legislation passed last year aimed at strengthening protections for U.S. service members. Global News 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nathan Hager in Washington. This is Bloomberg. Paul and Matt.
All right, Nathan Hager, thank you so much. I appreciate that. It's hot here in Manhattan.
It's so hot. It's very hot. And it's much hotter in the city, by the way, than it is out in Scarsdale.
Yes. And actually, within New York City, Midtown Manhattan is literally New York's hottest neighborhood. An abundance of concrete and too few trees drive up already high temps.
Yeah, this is called the heat island effect.
Okay.
When excess concrete, scarce shading combine to raise the temperature. Some neighborhoods are hotter than others. On the Bloomberg terminal, we have a heat map, literally a heat map. And it's pretty cool to look at. It seems like the coolest places to be are Staten Island, Queens, maybe the Upper Bronx. But when you get down into the middle of Manhattan, aside from Central Park, which is relatively cool, it gets very hot.
It does. And it just literally right where we are, I think might be the epicenter. So right there in Midtown Manhattan, again, lots of big buildings, lots of concrete, and no trees for shade. I'll tell you what.
13 degrees higher. So Midtown is basically 13 degrees higher than Staten Island or Central Park.
You know what is another hot spot is Newark, New Jersey. It is always just ridiculously hot. Now, on the other end, often the lowest high temperature in the country on several days in the summer, Carmel, California, where I spent so much time because it's probably 56 out there today. So as high temps go, it is a nice place to be. Not so much Midtown Manhattan. This is Bloomberg.
This is Bloomberg Markets with Paul Sweeney.
We got a lot of green on the screen here, but the volume is light. This is a market that's much more optimistic or bullish than maybe the central bankers are. 9.5 million job openings. What are people doing? Are they just sitting in Starbucks all day?
Breaking market news and insight from Bloomberg experts.
There's still some concern out there in the market that there is room for things to deteriorate a little bit more than what they're indicating.
As small and medium-sized businesses struggle, they don't present as much competition.
What are you guys thinking about hardware, software? How should investors approach this thing called AI?
This is Bloomberg Markets with Paul Sweeney on Bloomberg Radio.
All right, coming up a busy hour ahead. We're going to get the latest on the markets, and then we're going to have a simulcast. Pat Gelsinger, CEO of Intel, he's going to join Caroline Hyde and Ed Ludlow, Bloomberg Technology, to discuss that company's earnings and the outlook for our good friends at Intel. Then we're going to do a little car talk. I believe Matt Miller's going to step up here.
With Hannah Elliott.
With Hannah Elliott, awesome.
Yeah,
because you're
she's
test
gonna
driving
join us.
some new wheels, right?
I'm test driving an Alfa Romeo, but I think she's driven, well, definitely more cars and probably more Alphas than I have. So,
So we'll get all that coming up. So we got chips and we got cars all coming up in this hour. But first, let's kick it off and check in with Denise Pellegrini for a Bloomberg Business Flash.
Hey there, Paul. Thank you. And we do check the markets for you all day long at Bloomberg 1201 on Wall Street. I'm Denise Pellegrini. Stocks are higher and it's hot on Wall Street, but inflation does appear to be cooling. We got some key measures of inflation and labor costs. That's what's getting everybody so excited. The employment cost index increased 1% in the second quarter. That's the slowest advance in a couple of years. Also, a report shows the Fed's preferred inflation gauge. You'll be talking about this. The personal consumption expenditures price index, PCE, rose 3% from a year earlier. That's the smallest increase in more than 2 years. Core prices also advanced by less than expected, but there's always a naysayer, someone to pour cold water on this. Today, it's Laura Rahm's turn. She's chief U.S. economist, FS Ignatius, and she says the inflation fight by the Fed is just nowhere being over.
The base effects mean that the core inflation numbers are going to take a very long time to come down to anything remotely in a range of comfortable. Right now, the consumer data, a lot of data, and financial conditions, frankly, are just raging ahead. And when you look at the labor market, and the employment data is going to be a big piece of this. These are just not numbers that are consistent with 2% inflation.
And we'll be tracking the employment numbers as they come out month to month between now and the Fed's meeting in September. Rain with us there on the Bloomberg Surveillance podcast. Right now, as I mentioned, stocks are surging. The Dow up 200.6%. The S&P 500 up 46. It's at 4583 now. That's up more than 1%. The NASDAQ up almost 2%, up 272 points. The yield on the 10-year hovering just below that 4% level. It's 3.96 right now. COMEX Gold, it has been higher all day, up 0.7% right now. Crude oil, though, it is lower. We saw a bunch of days where it was higher this week. Now it's down about 0.4%, but still close to, as Paul mentioned, that $80 a barrel. Intel up close to 7%, and ExxonMobil down, both on earnings results. And do you guys know someone who never plays tennis but dresses like they do?
Yes, of course. It's a good look.
Neither of you guys, of course, but apparently we're about to see a lot more of them. Women's Wear Daily says sales of athletic skirts and dresses have more than doubled in the past 3 years, and sales of tennis-inspired shoes.
I noticed somebody on the
pickleball.
desk, one of our desk editors, she came in the other day wearing a tennis skirt, and I thought, what is going on?
And she serves you the script up on a pickleball paddle, right?
Yeah, I love pickleball.
Yeah. Pickleball's great. That's helping with this trend, apparently. That's one of the reasons more people are wearing tennis wear, because tennis wear, pickleball wear, it's basically the same. But also, it's just people that are learning the tennis apparel. It kind of gives you that same feeling of the work from home clothes, but it looks like you're, not the same as those gray sweats that Matt wore for the entire pandemic without
For a
washing
time
them.
before yoga pants were a thing.
Yeah.
And it was a worse world.
Okay.
Now we wash our clothes, but yeah. All right. Back over to you guys.
All right, Denise, thank you so much. We appreciate that. As Denise was saying, these markets are ripping at or near the intraday highs across the various indexes. Let's see where the action is under the hood. We do that with Bloomberg's markets reporter Emily Gaffeo joining us here in our Bloomberg studio.
Yeah, well, I'm looking at T. Rowe Price. That is the best performing stock in the S&P 500 today, rising as much as 13%. They beat estimates on second quarter profit, fueled by lower than expected adjusted operating expenses. Also, their assets under management now at $1.4 trillion. That's up 6.8% year over year. I always find the ETF angle in stories, though.
Of course, why not?
And I gotta say, they do have a number of ETFs that they launched a few years ago. Those actually are only 1.1 billion in assets. That's really small, Matt. You would know, compared to the bigwigs like BlackRock has over 2 trillion in ETF assets.
I
But
mean,
guess
there's
other
almost a
parts of their
duopoly,
business.
right, in the ETF world.
Yep.
But it's changing.
It is shifting. We are seeing, Katie Greifeld had a great story out a few days ago about how JP Morgan is actually taking in more flows this year. BlackRock still has.
Because of the active ETFs, because of JEPI.
JEPI has done insane inflows. It's their income equity ETF, but that's the ticker, JEPI. And
The JP Morgan Equity Premium Income ETF.
yeah, they're taking in a ton of flows, not quite as much the share of flows as
29 billion,
but
29 billion in one ETF.
So what happens to the mutual fund business? It's going to continue to shrink, right? I guess I'm told there'll always be a place for it in tax exempt funds like IRAs and things like that. But other than that, why would anybody have money in a mutual fund vis-a-vis an ETF? I don't know.
It's a good question. I mean, clearly for T. Rowe, it's working out for them. They have a large lineup of mutual funds, and at least today, shareholders are rewarding that. I don't think anyone's buying the stock because of the ETF business that they have.
T. Rowe's a big client of mine, as it is the entire sell side, and there's some just top to bottom, some really smart people, and they attract them to Baltimore, and they're just really smart people, and that gets reflected a lot of times in their performance.
The sell side doesn't like T. Rowe, though. They have no buys, 9 holds, which I know, Matt, you said is basically a sell, and then 7 sell rating.
I mean, do you
That's
disagree?
analyzing.
I mean, you cover the street, right? Do you disagree that,
guess,
is
if
a
you're gonna
hold rating really a hold?
Especially when most of the sell side seems to put a buy on everything. It does seem like the bar for what a hold means.
If you're not going to buy it, then why would you hold it?
Buy and sell.
Let's talk about Palantir, one more company that's getting involved in the AI hype.
Exactly.
And they've got a buy rating,
Right.
a new buy rating.
A new buy rating from Wedbush, and we know that Dan Ives over at Wedbush, he has a lot of bullish price targets on these typical tech names, the mega caps. He's a big Tesla bull as well. He said today, in a nutshell, we believe Palantir has built an AI fortress that is unmatched and poised to be a major player in this AI revolution over the next decade. He says that their total addressable market is $800 billion for.
And he may be one of the better dressed analysts on Wall Street, or certainly the loudest dresser. He comes in here with some outlandish,
The most
hats.
fun.
The most fun.
Yeah.
That's right.
Yeah.
Stock's up 6.8% today.
Yes, Palantir. And it's interesting, there was another good story on the Bloomberg terminal today about how many times AI has been mentioned on earnings calls.
Oh, was there? You got to message me that story.
So we have executives dropping the term AI at least 390 times already this earnings season, compared to 92 times a year ago.
Ah, that's interesting.
We're also seeing the words recession and economic slowdown drop off. We have references to recession down more than 70% this quarter in earnings calls compared to a year ago. Only 21 references as of Thursday.
I was razzing Ludlow earlier because he was selling his PG&E interview as AI content.
Pacific Gas and Electric?
And I said, dude, they're just saying AI now because of the whole, craze. I'm sure it started when NVIDIA took off. But to be fair to Ed and to PG&E, I then went back and looked through previous year's earnings releases, and they have been talking about AI previously.
I don't know how that would apply, but I'll have to go check it out.
So they use AI to try and forecast when and where, like, forest fires will start, for example,
Yeah, that's
or
big.
how to lay their cable. I don't know,
Or where peak demand might be. When peak demand
exactly.
might be. Okay. It's not just data science that we've been calling
Yes,
it
it is,
Isn't that
but
just
it's
IT?
Yeah,
Yes.
I said, every time they use a computer to model something, they're going to call it AI and hope for a stock boost. Speaking of stock boost, Are Paul and I the last people that haven't gotten into this market, Emily? I mean, is everybody now saying, okay, no recession, Fed's done, let's buy?
I think you guys are the last people, because I've been interviewing a number of asset managers and they're growing increasingly more bullish. I was speaking to JP Morgan Asset Management, and they had a recession call at about 40% in March in the wake of the mini banking crisis. They now brought that down to 20% just in the last 2 weeks. They were at 25% at the beginning of the month. Now they only see the chance of a recession at 20%, and they've gone full risk on buying stocks. A number of other asset managers, Schroders, turning more risk on as well.
Better late than never with the S&P up over 20%. So good for them. All right, Emily Gaffeo, thank you so much. We appreciate that. Emily Gaffeo, markets reporter, Bloomberg News, joining us here in our Bloomberg Interactive Broker Studio. In just moments, we're going to bring you the conversation with Pat Gelsinger, CEO at Intel. They had some good numbers. Stock trading higher, that's a good thing. Now, they're not necessarily an AI play per se.
Unfortunately
like
for them.
NVIDIA, right, like NVIDIA. But I think they're suggesting that as this thing plays out and AI becomes more part of the overall economy, that they will be well positioned. So that's the issue. But they had some good numbers, stock trading higher, so good for them.
And a good forecast that PCs will come back into strong demand in the second half of the year.
All right, so let's bring that conversation. Intel CEO Pat Gelsinger. He joins Ed Lullo and Caroline Hyde on Bloomberg Technology today after reporting earnings. Let's go to that conversation right now.
I want to welcome our global Bloomberg TV and radio audiences. Intel shares are jumping, with investors buying into signs that the chipmaker's long-awaited comeback is underway. Intel is forecasting sales in the current quarter of $13.9 billion, ahead of expectations. The company also notched a surprise profit of 13 cents a share in the quarter just gone, as a slump in demand for personal computers appears to be coming to an end. It's not all good news. Server demand isn't recovering as quickly. The company's still a little bit far from its heyday, where margins were at 60%, sales were nearer to $20 billion. Even so. Joining us now, Intel's CEO, Pat Gelsinger. You know, Pat, this is the second consecutive quarter where investors have cheered the earnings results. Shares are up. And I think before 2023, 10 out of the 11 earnings prints that you had, shares fell. Is this job done for you in the turnaround at Intel?
Well, Ed, we have a long way to go yet. But boy, having two good beat and raise quarters in a row, is super positive and really, I think, indicative of that turning point for the company. But we still have a lot of work to do yet. As we said, our client business is now, healthy footing. We've returned market share to where it traditionally was, a strong roadmap. The market's recovering, inventory levels are good. Data center, we still have work to do, but boy, 2 quarters in a row where we did a bit better than we expected. But we still have challenges in AI. And many of our really good products are only coming to market over the next year. Networking, still a lot of inventory to work through. And our foundry business is still just a seedling, just starting to show some green shoots. So I'll say, boy, far from finished, but it is nice bouncing off the bottom a bit and feeling that momentum in the market response.
Pat, why do you have the confidence to kind of call the end of the PC slump and also at the same time state that the server recovery is delayed to the end of the year?
Yeah, in the PC side, inventory levels are now healthy, right? Everything that we've seen and a lot of the, issues that we worked through Q4, Q1, and Q2 were over inventory levels by the OEMs and the channel. And now everything is healthy. Our roadmap is very good. We've gained share multiple times in a row. I think we're now at 5 out of 6 quarters where we've gained market share. So I just say in the PC business, healthy. Our position is good. And we're looking forward to the AI PC. And with our launch of our next generation product, Meteor Lake, later this year, we believe that it ushers in the AI PC generation. And I've compared that to like Centrino and Wi-Fi, 2 decades ago, a major new use case for why the PC is the best platform. So we're quite excited about that. On the data center side, we still saw that, the inventory levels still persist. China was weaker than expected. Their recovery is going slower. And, cyclically, we see the shift toward AI, these big training machines. Every cloud vendor is shifting their dollars to more focus on that. So those three things are leading to a bit longer recovery cycle on the data center. But like I said, we performed a bit better than we thought on the data center in Q1 and Q2. So we're feeling like our momentum and execution is rebuilding despite some of those headwinds that still persist in that area.
For our global TV and radio audience here at Bloomberg, we're speaking to Pat Gelsinger, the Intel CEO. Pat, you're forecasting gross margin of 43% in the current period. But it's a long way from that 60% gross margin level. Wall Street used to look at Intel and say, 60%. They would cheer you as a leader in that space. Can you just explain to our global audience the timeline and path to getting back to profit at that level?
Yeah, and we're working our way back in margins, and obviously a nice beat in Q2 on margins, and we forecast Q3 a bit better and Q4 a bit better. And part of it is the cyclicality of the semiconductor industry is brutal on margins. And when we, had an oversupply situation, inventory, that just depresses margins because, the factories cost the same whether they're full or whether they're empty. So you end up with these charges that, burden the price points and depress margins. We also realize that our own product execution has weakened our product position, which doesn't have ASPs as strong as well. So that's another factor. And the last factor here is, the plan that my CFO, Dave, and I have laid out is an expensive plan. We are making aggressive investments to build the capacity to get back to leadership. And thus, we're moving through nodes very rapidly. We said 5 nodes in 4 years. So that causes us to have a lot of undepreciated capacity that we're working through quite aggressively. Also building up a bit more capacity for our foundry initiatives. So all of those factors depressed margins to historically low levels in the first part of the year. And we're just seeing ourselves now working to build back to margin levels, but we're still very confident that as we build our foundry business, get back to leadership and process and products, that those kind of margins, that's exactly what Dave and I aspire to the future. And we feel like Q2 was a good marker, that yes, we're building momentum to get back there.
Thank you for joining us here on Bloomberg Television and Radio Worldwide. We're joined by Pat Gelsinger, Intel's CEO. You described the foundry business as a seedling, but every time you and I have spoken, you've hinted that there is a big customer waiting in the wings to give life to that business. What can you tell us about that, Pat?
Yeah, and we're having good momentum. And as I said on the earnings call yesterday, we have 2 big customers in particular that we made very good progress over the last quarter for our foundry business. We did have one, I'll say, confirmatory, not as big a customer, but the Ericsson announcement, their commitment to 18A and our next generation work, with them that we announced this quarter. So I'll say overall, we're seeing good momentum and a really strong pipeline of customers, and we hope to make, meaningful announcements later this year on that. We also pointed out on our earnings call that now we're seeing a lot of interest in our packaging technology. So it isn't just wafer manufacturing, it's also package assembly and test. And Intel has long-term been a leader in packaging technologies. And because of key areas like high-performance computing and AI, there's tremendous interest in these advanced packaging technologies. And we're finding a lot of customer interest in that incremental area of the foundry business as well. So overall, and the numbers were good for us in Q2 for foundry, great pipeline of activities, great progress on a couple of these most major opportunities. So I'm feeling good, like we're starting to really see that momentum build in this new business area for Intel, our Intel Foundry Services.
If we think about what a potential customer might be, at the scale of Apple or Google or NVIDIA, what is it that they want from you? What is it do you think that you can provide them?
Yeah, when I view it, we have to go through 4 stages. One is, are my transistors good? Can they build good products using Intel? Second is, do I have the design tools, the Cadence and Synopsys EDAs and the IP libraries? Have we gotten all of those basics done so that they can design on us? Then third, do we have good terms and conditions? Are they better off coming to me versus, TSMC or Samsung as an alternative? And then finally, are we customer oriented? Can they really have the support? Because my factory becomes their factory. So we have to work through all four of those stages before they're ready to commit major businesses to us. And that's why it takes a while. They got to do designs and tests and pilots and, work through the financials. And, this isn't a mature business area for us. But I'll just say we're making great progress. And in particular, the two most significant opportunities, it was a really good quarter. And I'm feeling very optimistic that, yes, we'll bring them across the line and start to really accomplish what we've laid out, with our, reshoring and building the Western foundry. We also had great success with both the EU and the U.S. CHIPS Act this last quarter, which are affirming the strong support, of the Western governments on this strategy. It's the right strategy at the right time. We're making good progress.
A big part of your smart capital approach. We have to talk about AI. You see a world in which the PC plays a role for localized running of LLMs. But what are the use cases that you see, Pat? The applications where a PC with AI-specific chips is relevant?
Yeah, to some degree, they're numerous, Ed. Let's just give one example. In the future, my word processor, I'm going to hit a button and say, give me a legal brief that describes this, and it's going to get locally generated. My video conferencing, my Teams or Zooms, I'm going to say, give me, real-time translation across multiple languages, for this meeting. And I'm going to have that in real time on my PC. My games, for my, all of that is going to become synthetically generated worlds locally on my PC in real time. So we see it across creator, across productivity. And as I've said, this is sort of like a Wi-Fi moment, for the PC of the future. And that begins with our Meteor Lake launch in the second half of this year.
Pat, quickly, a $1 billion pipeline for AI products through 2024. Just give me a sense of the pace at which that pipeline is growing now.
Yeah, we had a super exciting quarter. As I said, we 6x that pipeline in Q2, so we saw a huge uptick on that. And I've deployed a lot more sales resources, software resources, to jump on those opportunities worldwide. When we have our Gaudi 2 chip that is, now in volume, we've just seen the first wafers on the next generation Gaudi 3, which will be our 2024, product, and then we have our 25 and 26 products underway. So, we're seeing a lot of momentum there, and the world is looking for a great alternative, an open alternative, a more cost-effective alternative, and Intel is a trusted supplier. We think this is a great, area for us to put a lot of energy into, and we're seeing the response from the marketplace now.
Intel CEO Pat Gelsinger, we appreciate your time here on Bloomberg TV and radio. Thank you.
All right, that was Pat Gelsinger,
Markets,
CEO
headlines,
of
and
Intel.
breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And it is 12:20 on Wall Street, 12:23. I'm Denise Pellegrini. We check the markets all day long. We were just listening to Pat Gelsinger, Intel CEO, telling us, among other things, just a few minutes ago, watch for more announcements this year. There is a lot of chatter about what that is. Intel shares have been up 6% or more, up about 6.5% right now. They've been up most of the day today. In fact, all of the day today, because the chip maker and chip tech company has delivered a surprise profit. Earnings expected to be stronger than analyst estimates were going forward based on their forecast, and the PC slump had battered its business, but that doesn't seem to be the case anymore. And the other thing that's got everyone so excited today, better than expected numbers on inflation. Key measures of inflation and labor costs cooling significantly. That's adding to growing optimism. The economy may be able to avoid a recession. The employment cost index marking the slowest advance since 2021. And a separate report showed the Fed's preferred
inflation gauge, the Personal Consumption Expenditures Price Index, PCE, that rose less than expected as well. Stocks surging, the Dow up 229.6%. The S&P 500 up 1.1%, up 49 points. And the NASDAQ, it's up more than 2% right now, surging 290 points. The yield on the 10-year right now, 3.96%. COMEX Gold, it is higher, up about 0.8% right now, $19.62 an ounce. Crude oil right now, though, it is lower, down by about 0.5%. ExxonMobil shares, those are lower, falling short of analysts' expectations with a third straight drop in profit. And the suds industry is trying to save seltzer. Following an explosion of popularity late last decade, the hard seltzer business has seen its sales flatten, as you know. But for the Boston Beer Company, owner of Truly Hard Seltzer, the pain continued last quarter with no growth. But what has been growing, guys, is demand for twisted tea. They're seeing a big spike in sales of twisted tea. But it helped them to stronger than forecast profit and sales for the quarter. Shares are up 18% right now. You could buy a lot of twisted tea if you
it's all just
owned
wine
shares
coolers.
yesterday.
It's all just Zima. You know, it's all just
from back in the day.
Drinks for high school kids.
Yeah, stock's up 18% though. I mean, you can't argue with that.
That's very true. Denise Pellegrini, thanks very much for that. I want to get to cars right now.
Oh, there we go.
I'm so happy to be back on this program and talk about the car industry. I've been covering it for 20 years now, and as a result, as you know, manufacturers often give me vehicles to test out. It's the best part of the job. This week, I am driving the Alfa Romeo Tonale, which is a subcompact SUV. It's a very crowded segment, but this one is electrified. It's got a hybrid drivetrain. It has a very tiny gas motor, 1.3 liter, four-cylinder motor driving the front wheels, electric motor driving the back, and it can do more than 30 miles of range on the battery by itself. So it's a very interesting vehicle. Also joining us to talk about Alfa Romeo, Stellantis, which is the owner, as well as the broader car industry, is one of the few people who has driven more cars than me. Bloomberg Pursuit's Hannah Elliott joins us from Los Angeles, and I'm really glad. Hannah, I've been chasing after you for weeks to get you on the show. Thanks so much for joining us. What do you think, as someone who's a huge car enthusiast, someone who loves older cars as well as newer cars, about the Alfa Romeo brand, the Alfa Romeo story?
I mean, first of all, thanks for keeping on the chase. I'm so happy to be here with you, Matt. Second of all, what's not to love? This is a 100-plus-year-old brand with real racing history. It was winning the Targa Florio in the early 1920s. Of course, we have, famous Alfa Romeo movie cars like the little Spider and the Graduate, of course, that everyone knows and loves. It's got real history. It's Italian. Who doesn't love Italians? And it's owned by the largest car brand the fourth largest, car brand in the world, Stellantis. Like you said, there's a lot going for it. I actually like how even the modern cars look. I think they look distinctive. They look interesting. And they're pretty well built. They've got some great specs. They're competitive within the market share. But my caveat is, for whatever reason, Alfa Romeo has really struggled to gain real momentum and real ground in the U.S.
It's very true. Yeah. I looked at the stats, and last year, Alfa Romeo sold 12,845 cars, which is very little, right? BMW sold more than 330,000. Mercedes sold more than 340,000. Tesla sold almost 500,000 cars last year in the U.S. market. So my question is, why doesn't Carlos Tavares, why doesn't Stellantis, it's a $60 billion company, invest more in this brand? Listen to what Tavares told us on Wednesday.
Alfa Romeo is a big success. Since Stellantis was created, we made a huge turnaround of the business model. It's now a highly profitable brand. It's a growing brand, 60% volume growth on the H1 2023 compared to last year. So it's growing, it's highly profitable. We have turned around. We are happy to be in Formula One, and we are going to increase our presence in the US, including at one point in time.
So it's interesting that they're getting back into racing, Hannah, and I'm sure that's key for an enthusiast like you. But the problem for me is not only, this car that I was test driving is front-wheel drive, which is already, forget about it for me.
Really?
Yeah, I mean, that's just not my thing. But for some people, it's a great vehicle because it has
it's good in the snow.
Good electric range. It has, I guess, it's okay in the snow, and you could also take longer trips with the motor. But my problem is it breaks down so much. In J.D. Power's initial quality survey, they showed 204 issues per 100 vehicles, and that's only the first 3 months. So in the first 3 months, every owner essentially has more than 2 mechanical problems. That's something that they have to fix.
That's just completely untenable, and unfortunately, in the U.S. especially, that has been the existing reputation for Alfa Romeo, so much so that it's kind of a joke, even for people who really love the brand and who collect the old cars and who want to buy the new cars. That is just the sticky reputation that they have. And, you know, of course, Tavares is saying they're pumping money into it and it's successful, but he's talking on a global level. In the US, Alfa Romeo has had a very spotty history. Let's not forget they were dormant and didn't sell any cars here for several decades. In 2016, they sold fewer than 600 cars for the full year in the US. These 12,000 that they've sold last year were down from the previous year, and this year they're on track to sell even fewer. They're probably going to sell around 10,000. So in the U.S. specifically, you're right. You know, when you think about Alfa Romeo being in the same competitive set as Audi, BMW, Mercedes, even Volvo, even Jaguar, there are a lot of options. So when you're having reliability problems, it's an automatic no-go.
It's too bad because the Giulia and the Stelvio apparently are amazing performance cars, but if they break down, you know, that's kind of a deal breaker. Also, you know, Hannah, I was joking with you, and you pointed out that everybody made the same joke about the new Ferrari SUV. It kind of looks like a Mazda SUV. This Alfa Romeo Tonale that I was test driving looks exactly like the Dodge Hornet. I think we might have video of the Dodge Hornet. The reason is that they're essentially the same car. Dodge saw that Alfa was making this. They wanted an entry into the subcompact market, so they just stole it, being a sister brand, and changed like a couple pieces of sheet metal. But it's $10,000 less, and I can't imagine why anybody would want to pay more for the Alfa when you could get the same car as a Dodge for so much cheaper.
Okay, this is where we may disagree, and in a good way, because I feel like you really understand, like, the paper. The paperwork says the Dodge is the better buy, but I still am a little bit shallow, and I like this sort of Italian cachet that Alfa Romeo has, even though all the things we already know about Alfa Romeo. To me, it does at least have this sort of Italian luxury cachet. So I'm going to still probably go with the Alfa Romeo over the Dodge. I also think the interior of the Alfa Romeo looks a little more interesting than the interior of the Hornet. Tell me if I'm wrong, but that's my take.
I think you're probably right. By the way, the good news is I went on a call. It was way too early for you, but this morning at 6:30 a.m., Maserati CEO Davide Grasso had a conference call, and he said they have poured money into the quality issues to try and fix. Obviously, it's a very different brand and a different segment, but they're still both owned by Stellantis. He said they're going to try and fix the quality issues there, and they've made great headway.
I mean, I'm glad to hear it. I do think perception lags behind reality, so it may be a few years before the public consumers pick up on this improvement. And I do think, you know, Alfa Romeo hasn't been marketed strongly in the U.S. the same way that Audis are marketed. So some of it could just, you know, if they keep throwing money at it, we may see some growth. Who knows?
All right, Hannah, thanks so much for joining us. Hannah Elliott, staff writer for Bloomberg Business Week from Los Angeles, talking to us. A little car talk right there. Why not? Right now, let's head down to Washington, D.C. Nathan Hager's got World and National News.
Why not? Thank you, Paul. President Biden intends to sign an executive order limiting critical U.S. tech investments in China by the middle of next month. That is what people familiar with the internal deliberations are telling Bloomberg News. Right now, the timing for this order is set for the second week of August. It has slipped before, but our sources say the discussions on the order have shifted from its substance to the rollout. The limits on investment would be focused on semiconductors, artificial intelligence, and quantum computing, and would not affect existing investments in China. The restrictions also wouldn't take effect until next year. Former President Donald Trump intends to keep running for the White House trials, even if he's convicted of criminal charges. The former president told a conservative radio show this morning there's nothing in the Constitution to stop him, but Pangea policy founder Terry Haynes says Republican voters might.
As we continue on through the summer and the fall, I think one thing that's going to happen here is that the president starts to sink under the weight of 1,000 paper cuts as more and more people find him, including primary voters, find him to be unelectable.
Pangea Policies. Terry Haynes spoke on Bloomberg Television a day after special counsel Jack Smith added new charges against the former president in the classified documents case. Mitch McConnell plans to keep serving as Senate Minority Leader for the rest of this Congress. That is according to a statement obtained by CNN. Questions about the 81-year-old's leadership surfaced this week after he froze at a Capitol Hill news conference. The Emmy Awards are being postponed for the first time since the 9/11 attacks, and it's because of the Hollywood Writers and Actors strike. The 75th annual ceremony was scheduled for September 18th. No new date's been set, but the New York Times reports organizers are hoping for January. Global news, 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nathan Hager. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And it is 12:40 on Wall Street. I'm Denise Pellegrini. We check the markets all day long for you here at Bloomberg. Stocks are higher. We have a bunch of signs. Inflation not burning as hot as previously thought. But don't exhale yet. Listen to this. Jonathan Pingle, he's among a whole parade of people warning us don't breathe easy on inflation yet. He's the chief U.S. economist at UBS. He says don't be fooled by today's data. He says the Fed is still a long way away from seeking
This is
price
all
stability.
good news, and the economy has certainly proved resilient. But they do have this problem that we're making progress on inflation, it looks like, but we're not actually at 2 yet, and there's actually a pretty big gap between now and how we're going to get there, and a lot of uncertainty.
And Pingle with us there on the Bloomberg Surveillance Podcast. A lot of uncertainty, but investors are certainly shrugging that off today. The Dow is up 0.6%, 217 points higher. The S&P 500 up more than 1%, up 48. And the NASDAQ up almost 2%, up 275 points. The yield on the 10-year right now coming back a little bit from that high of 4% we saw yesterday. The yield right now 3.96%. NYMEX crude, it is lower today. We've seen NYMEX crude higher for much of the week. It's down now about 0.5%, but still close to $80 a barrel, 79.67 a barrel, we'll call it right now. Intel shares, they're higher by better than 6%. We had Pat Gelsinger, CEO, tell us just a few minutes ago, watch for more announcements from Intel this year. There is a lot of chatter about what that is. There's even some talk there may be a big client. That is not confirmed, though, but that is something that's getting a lot of attention on social media. The chip maker and chip tech company did deliver a surprise profit, so that's what's behind the jump today. ExxonMobil falling short of analysts' expectations. Shares are down 1.5%. And guys, you know that ship that's burning near the Netherlands coast, right? Well, the number of electric cars on it, they said there were about 25. Now they're saying there are hundreds, maybe about 500 of electric vehicles on there. The cause of the blaze, still unknown, and nobody is saying that the electric vehicles are the cause. Well, at least not yet, but those...
I mean, even if the electric vehicles aren't the cause, they are definitely fuel for the fire.
The cause of the headache.
Yeah, once those lithium-ion batteries light on fire, you just can't put them out for days.
And don't they, Matt, don't they reignite after, after you think you put them out?
Exactly. They're like those birthday candles that you blow out and they come back on.
Why does that happen?
I don't know the chemistry, but John Tucker apparently studied this in college.
Well, we'll ask him next week.
Yeah.
In college, huh? When he graduated last week?
He remembers, though. Somehow he remembers college. I have totally forgotten.
All right, guys.
All right, thank you very much, Denise. We appreciate that. All right, one of the challenges clearly in the financial services industry and in the economy in general, but certainly in the financial services industry, is diversity and inclusion. And that, we've heard the CEOs of some of the biggest banks and investment banks talk about that for quite a while now. That's also true in the venture capital world. Darcy Whalen joins us. She's head of platform for Outward VC. She joins us here. Darcy, talk to us about diversity, inclusion. In the venture capital community, it's such a, it's a relatively small community. I kind of think of it as an insular community in some ways. Talk to us about diversity and inclusion there.
Yeah, absolutely. Thanks so much for having me on as well. I think, there's been a lot of discussion around diversity in the venture capital landscape, and there's a lot of work that's being done. There's around 25% of VCs are women, so we need to see those numbers increase a lot more. And I think with that, you'll see more investment in female founders as well. But there's a number of women in venture capital communities that are helping venture capital firms problem solve this and ensure there's more inclusion. So it's not just about hiring more women into your firms, it's also about making sure that when they start working there, the culture is actually inclusive of them, and it gives them a platform to have a voice and to actually start to influence some of the investment decisions. We've got a long way to go.
So Darcy, 26% of 26% of the humans in VC are women? That seems like a lot. What's that compared to in the previous years?
I don't actually have a benchmark on previous years, but I mean, if you look at senior leadership, there's actually 15% of those women are partners, and I think that's a figure that needs to change quite a bit.
I just know that we've heard quite a lot that only 2% of venture capital money goes to female-founded firms, which to me is just insane because if you cast a wider net, you're going to make a lot more money. Why aren't these well-educated, very intelligent professionals investing more, hiring more women and investing more in women? Don't they want to make more money?
Diversity is good for business, and I think that is reverberating around the industry. I think, 10 years ago, it was very much a man's world, and it's also hard to attract women into organizations where all they see is men. And I think now with more women in the industry, it's becoming a much more attractive place to work, but that just will take some time.
What we've seen across greater Wall Street, and I've been involved in recruiting for many years on Wall Street, is you bring in a new class of employees, analysts on Wall Street, investment banks, for example, and it is very diverse and it's very represented. But by the time you get 10 years later to the partnership track and the managing director, whatever, it really has become less diverse. So the more senior you get, the less diverse it is. Is that also true in the VC space?
Yeah, absolutely. But I think what's happening here is you're starting with pretty much most partners being male, and it's taking time for women to grow up the ranks and change things from a top-down perspective. But then also what happens is women become mothers and they need to take family leave, and that also impacts women's career trajectory as it would in any industry. But I think for sure it's changing. And if I can just make a comment on some of the women that I know in the venture capital industry, they give me a lot of confidence in what's to come in the next kind of 5 to 10 years, because they are starting to grow through the ranks, and there's more women than ever starting their own funds as well.
So this is something I've talked to Jesse Draper about over at Halogen VC. Isn't there a great opportunity then, Darcy, for women like you, for platforms like yours, to go out and just clean house on the opportunities that the men are missing? I mean, especially if you create your own business that has, for example, great parental leave, benefits that women want, you can attract the best talent and make the best investments.
Yeah, absolutely. I think there's a huge amount of opportunity still to be taken, and that's why you do have funds that are being set up to solely go after, female founders or underrepresented founders. I think there's pros and cons to that approach, but certainly within venture capital teams, there's a much more kind of accountability and transparency around the actual data. So tracking how many female founders are we seeing per month? Is this increasing per month? And how does it compare to the industry standard? And I think before we didn't really have the data, but now with new kind of ESG policies coming into play and from the pressure coming top down from LPs, you're able to get a better steer and a better benchmark on where you stand against your peers. And I think it's naturally a competitive industry, and that'll only foster, more investment in diverse founders.
All right, Darcy, thank you so much for joining us. Really appreciate it. Darcy Whalen, head of platform for Outward VC, talking about the diversity or lack thereof, or the challenges in that field in VC investing. But Matt, you bring up a good point. I mean, it seems like the more people you bring into the discussion, maybe the better and the more diverse people you bring into discussion, maybe the better the investment outcomes, you would think.
I'll never forget a story Mindy Grossman told me when she was at Nike, and she was like the number 3 person there in a boardroom full of 25 guys. She was the only woman. Right. And Phil said, "Hey, we want to sell more shoes to women. What should we do?" And the whole room looked at her. And she was like, "Maybe get more of me,
Exactly right. Seems pretty simple there. So we'll see. All right, looking at these markets here. We've got another strong day continuing here. The S&P 500 up a little over 1% here. The NASDAQ up just under 2%. So some big moves here we're seeing to close out this week of trading. We had lots of central bank movement this week. Rates going higher, but perhaps a plateau. We had some pretty good earnings, particularly out of technology, and that seems to be a couple of the drivers here. We're going to have more coming up. This is Bloomberg. get some company news right now with Lisa Mateo.
You got it. Toyota sales and production hit a record in June as the company recovers from a shortage of computer chips and other parts. Bloomberg's Gina Cervetti reports.
Toyota said global sales rose 9% to almost 969,000 cars. Monthly output rose almost 10%, and North America was one of the regions where sales rose the most.
All right, and right now Toyota's shares are down about 0.5%. And it's official, the Barbie movie has surpassed $500 million globally in ticket sales, and it's only debuted a week ago. Shares of Warner Brothers Discovery right now, they are up more than 3%. Investors taking notice, but you know who else is taking notice? The company who makes the doll. Yeah, Mattel looking into making a sequel. CEO Yanon Kreitz spoke with Bloomberg TV.
With the Barbie movie doing so well, there will be opportunities. And we've always said that this is not just about individual movies, but we're looking to create film franchises that have cultural resonance. And the opportunity for Barbie is pretty obvious given the success of the Barbie movie.
Now, Mattel sales, they actually fell 12% in the second quarter, but revenue from Barbie, that's expected to help. Now, shares of Mattel right now, well, they're down about 1%. And Biogen, well, they have confirmed that it will buy Reata Pharmaceuticals for $7.3 billion. That's including debt, and that's to expand its rare disease treatments. Now, Barclays says that Reata's treatment, which does have FDA approval, could generate peak sales of $1.5 billion. Right now, Reata shares, they are up 56%, Biogen up about 5%. Those are the stories.
You're listening to Bloomberg Markets with Paul Sweeney on Bloomberg Radio.
All right, Matt Miller and Paul Sweeney here in the Bloomberg Interactive Broker Studio. Boy, good trading day today. S&P 500 up a little over 1%. NASDAQ up 2%. Not too bad there. Even just kind of spreading out to the Russell 2000. That's up 1.5% as well. So it's good to see some greater breadth out there in terms of this market. 10-year Treasury off about 3 basis points, just under 4%, 3.97%. We did touch 4% earlier in the day. WTI crude oil, that's off about 0.5%, just under $80 a barrel. So it's had a nice move over the last 4 or 5 weeks off of that 67 price of just about 5 weeks ago. So we're keeping an eye on that and the inflation impact there. Right now, let's head down to Washington, D.C. We're going to get world and national news, and we're going to do that with Nancy Lyons.
Thanks, Paul. New charges against former President Trump are adding another layer to special counsel Jack Smith's classified documents case. He's added a third defendant, Mar-a-Lago maintenance worker Carlos de Oliveira, and Smith is accusing the former president of telling his employees to erase surveillance video from the room where the documents were kept. Loyola Law professor Jessica Levinson says these new charges are extremely serious.
Now what we have is allegedly an attempt to try and delete evidence of them concealing that information. It's a cover-up on top of a cover-up.
Loyola Law professor Jessica Levinson says jurors intuitively understand that if you did nothing wrong, why were you trying to hide video surveillance footage? Former President Trump has pleaded not guilty to the charges in the initial indictment. Security measures are being taken outside a Georgia courthouse ahead of potential indictments against former President Trump. You can see barriers now between the sidewalk and the road. District Attorney Fani Willis is soon expected to reveal charges connected to a grand jury report, which details an investigation into the 2020 election in Georgia. Well, Donald Trump and his GOP opponent, Ron DeSantis, are both scheduled to be in Iowa today, setting up one of the most climatic moments of the early presidential cycle. Bloomberg's Amy Morris with details.
Donald Trump and Ron DeSantis are both slated to speak at the Lincoln Dinner in Des Moines, Iowa, a staple gathering for Republicans, and the first time they've appeared together in Iowa since DeSantis entered the race. DeSantis is rebooting his cash-strapped campaign as he continues to slide in the polls. Trump, who is polling ahead of all other Republicans, is facing more legal issues. He also has to mend ties with Iowa conservatives after attacking Governor Kim Reynolds for remaining neutral in the primary. In Washington, I'm Amy Morris, Bloomberg Radio.
Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. Now back to you, Paul and Matt.
All right, Nancy, thank you so much. We appreciate it. We've got Joe Matthew. He's the Sound On guy.
Yeah.
That's coming up next, but I want to talk about Sound On.
Well, I'm trying to convince Joe to come to the Fish Show with me tonight.
That's what I want to talk about.
Yeah.
You're going to the Fish Show tonight.
So Fish kicks off a 7-day kind of a mini residency at Madison Square Garden. 7 nights, yeah. So they do tonight.
Is this night one?
And tomorrow. This is night one.
What's going to happen if I go there with you?
I'm pretty pumped up.
Am I going to wake up in a dumpster tomorrow or something? Like what? I want to know how wild.
We're not going to hit the balloons after.
Well, then why are you going?
No, we pregame at the Pig and Whistle near the Garden. Then we'll go and see the show. It's an amazing experience. I can't always take the entire.
I was going to say you go through the whole Space Jam like you do the.
It's like
when they take
sometimes
the
it's just
around.
It gets too much to me. Like the third set is too intense, so I go out and talk to the chicken sandwich vendor or whatever.
Okay,
how long is a Fish Show?
It can be a few hours.
9 hours. Now, but you're not on the floor, which I thought was interesting. I thought you'd be like at the stage, little moshing, getting to know people.
My brothers they do the 7-day pass. They'll go to every night.
Is that right? So they'll
they'll do the floor like half the night and sit in the stands the other half. I can't stand up for that long, I'm almost 50. It's too hard for me.
Right. Same here. So tell me where the old guys sit.
I'm going to sit back in, I like section 102, like right back from the stage.
Straight back from the stage.
But the cool thing about MSG is you can just kind of float around there. Security's not too tight. You can just hang out with people in various sections.
Okay.
And you can stub your way down to the floor if you want. It's
So you
not
can
too
float.
not
You're
too
a
difficult.
floater.
Yeah.
All right.
I'll walk around.
All right, so we got the Fish Show starting tonight. We got Matt going. Joe's trying to he's being talked into going there.
Yeah.
So that might happen.
I need a ticket here. Somebody, I want a good ticket.
We'll
All
get
right,
you
you're
a
listening
ticket.
right
We'll get
now.
you a
Tell me
ticket.
how to get.
I know a guy. Don't worry about it. I know a guy.
This is
Sound
gonna be a night.
On with Joe Matthew, usually from Washington, D.C., but we got him in here in New York. Why? Because Fish is in New York. That's coming up right now.
From New York
York City. For our viewers worldwide, I'm Katie Greifeld. Bloomberg Real Yield starts right now. Coming up, the Fed goes from a hawkish hold back to a hike, with bond traders debating if July truly was the end, while the Bank of Japan goes for shock and awe. We begin with the big issue. What now?
The Fed is at this tenuous point.
The Fed and the ECB, she's doing exactly very, very close to what Powell is doing.
They didn't want to convey accidentally anything dovish.
The United States actually looks it has been looking relatively resilient.
Tremendous momentum in the consumer.
Housing is doing spectacularly well.
The surge that we're seeing in the U.S. right now.
In the U.S., the signs are still pretty good.
Europe might actually see that too.
All central banks have have the same problem.
The BOJ with a surprise move.
The Bank of Japan are tinkerers. The Fed and even the ECB, I think they're going to take a back seat.
The Fed wants to stop if they can.
We spend so much time talking about recession or soft landing.
For us, it's not the concern around recession.
If I'm Chair Powell, I permanently have my fingers crossed behind my back.
Perhaps we're getting a little bit too comfortable around the inflation trajectory too soon.
The bigger risk is for the Fed is to declare mission accomplished too early.
Joining us now, I'm thrilled to say we have BlackRock's Gargi Chowdhury and Allspring's George Bory joining me on set on a Friday afternoon in July, no less. It's great to have you both with me. And George, since you're the closest to me, I'll start with you. It was interesting watching the market reaction to Jerome Powell on Wednesday because it was very minimal. We got a bigger reaction from the Bank of Japan news, it felt like. Are we entering into a post-Fed world for the time being?
Well, as you point out, it was kind of a big yawn. The market sort of expected the Fed to do exactly what they did. They raised rates. They provided ongoing hawkish commentary. But what they really did is they left open their optionality. They created sort of a, kind of a broad range of things they could do. They're very attuned to the risks regarding inflation, and they certainly want to maintain the confidence of the market. They pretty much threaded the needle. Mm-hmm. And then, as you said, the Bank of Japan kind of surprised. They kind of pulled up the last anchor, if you will, that's been sort of holding down, sort of markets and volatility. And you saw a nice little pop in global yields. But the baton is being passed from the Fed, to the rest of the world. Mm. And Japan has sort of been the last, really, to kind of grab that baton and run with it.
Gargi, weigh in here. Do you think that the baton is being passed? What's going to drive this market?
Sure. Hi, Katie. First of all, it's great to be here with you both. So what's going to drive the market? I think outside of the central banks, which were obviously very exciting, or at least in Japan it was very exciting, I think it was inflation data. And the Fed told us over and over again, I disagreed just a little bit. I don't think interesting. Again, that annualizing down to 4%.